Hello, everybody. Welcome to this new edition of BCR webcasting. And today we're going to be talking about a very new trade finance solution that has been developed across FCI, EBRD, Armswissbank, and TBC Bank. We're going to get an understanding of how that works and why it was developed and what the advantages are to importers and exporters. So I'm just going to ask my guests here to introduce themselves one by one. Let's start with you, Tamara. Just introduce yourself, if you don't mind.
Yes, sure. My name is Tamara, and I'm Tamara Hizanishvili, and I'm head of trade and factoring department at TBC Bank.
Okay, and Angela?
Hi, my name is Angela. I'm the head of corporate services department, which is in charge for factoring and international trade.
Rudolf?
Hello, I'm Rudolf. I'm head of EBRD's trade facilitation program, under which we support more than 100 partner banks in 29 countries in the development of their trade finance and receivables financing business.
Peter?
Peter Mulroy, Secretary General, FCI. FCI, I think most of you know, is a member association of factoring companies involved engaged in traditional and other forms of receivables finance. We have 400 members in 90 countries, and I'm delighted to have both TBC and Armswissbank joining us as of course members of FCI, and of course our close relationship with Rudolf and EBRD.
And BCR, of course.
That's to be without mention.
Peter, I'm going to start this off with you. This sounds very exciting, this new solution. Can you describe how it works and why it came about?
Well, the whole, let's say, reason why companies join FCI is to trade with each other and support each other in an open account receivables finance transaction on a cross-border basis. We have members, as I said, 400 members that, and obviously various degree use the FCI two-factor platform called edifactoring.com to transact cross-border business. Again, using and assigning accounts receivables from the originating country where the exporter is located to the debtor's country. And the whole basis of this is to utilize the export factor and the import factor together, and the buyer and seller, to transact business. And of course, in some cases, it is more challenging in countries, certain countries, developing countries, where the export factor has to take exposure, not just against the debtor, but against the debtor's financial institution. And so in this case, the export factor may need additional, let's say, protection, additional assurance of payment of the invoices at the due date. And this is where a development bank like EBRD steps in through their TFP program, which I'll let Rudolf describe in more detail later, but they can then provide an additional assurance of payment and allows the transaction to, let's say, move forward. And so this is unique because it's never really been done. I know EBRD has done transactions utilizing this kind of concept in the past, but I have to say this is really the most formalized transaction embedded in EdiFactoring and utilizing the TFP program. So we see this as a potential, obviously not just for this transaction, but for future transactions in the entire EBRD region. So we're very excited, quite frankly, and we're actually working on other transactions as well in a similar vein, like in Africa. We have a couple of transactions right now that we're doing something very similar with another development bank. So this is in this, let's say, enhanced risk world, where this is certainly something that is, I think, very, assuring to our members that they can have this additional service. So we're very, very grateful to the EBRD.
Yeah, and presumably before this was developed, then certain transactions were not taking place, and exporters and importers were frustrated by the situation. Okay, let's move over to Tamara. Tamara, this I understand this initially was your idea and Angela's idea to develop this solution, and brought it to EBRD and FCI to essentially put it together. What does it mean for you and your clients, Tamara? And tell us about the frustrations that you were experiencing in these kind of situations before this solution was made available.
Michael, thank you for the question. First of all, I have to say that it was very interesting and very exciting working on this quite sophisticated solution together with EBRD and Armswissbank. There were a number of reasons why we succeeded. I should say that TBC is the largest bank in the country and covering almost all corporates and SME companies operating in the country. Our strategy is client focused. Therefore, first thing what we do is identify the needs of the clients and adapt our products and services according to their requirements. Our main goal is to create value for the customer, and our approach to this deal was the same. Our client has been exporting food products to Armenia, and both Armenian and Georgian companies were looking for secure and easy payment solution. Initially, it was advance payment, but they started moving to deferred payment term, and it was buyer's request to our client. First, deferred payment transaction was done through documentary credit with discounting, where EBRD provided guarantee under trade facilitation framework, and it's a standard transaction, as everybody knows. But the business between Georgian and Armenian companies has become regular, and they identified that documentary credit was not exactly they needed because of complicated processes related to issuing LC, then documents preparation process, high commissions, possible delays in payment in case of discrepant documents, and etc. So for regular cross-border trade, as Peter already mentioned, international factoring shall be the best solution for the companies. But we as a bank face the challenge, and both banks, we and Armswissbank, the factoring shall be done through FCI platform, two-factor system, EDI platform, as we know, but no precedent how to involve IFI, in our case, EBRD, in the structure. No precedent, no experience, so that was challenge that we experienced. Thanks to very productive collaboration with EBRD and Armenian colleagues, together we managed to structure international factoring solution within FCI platform under two-factor system. We used EDI, the same messages and every step of the FCI platform. But on top what we do and what was done, that EBRD provided guarantee under trade facilitation program. So overall transaction was secured by EBRD on top. EBRD cover was very productive because it decreases capital costs, and consequently we were able to offer our customer well-structured, effective and low-cost financing solution. And thanks to high professionalism and strong commitment of all the parties involved, this transaction was executed very smoothly. And I think that we closed not only one interesting deal, but also worked out the structure under FCA platform with participation of IFI, which could be used for other transactions in the future. And we can share with our experience with other colleagues under FCI platform.
Excellent. So really, prior to this, the only options that were really open to you was the use of letters of credit, which cumbersome, more expensive, more errors can enter into those the creation of all those documents. So this seems like a much more efficient and altogether better solution. Let's move to you, Angela, and tell us from your side what this means to you and your client as the importer. How is this improving whole situation in trade transactions and trade finance.
Thank you for your question, Michael. So we have a TFP limit set by EBRD, and which we use quite actively. And for this case, we applied to EBRD to issue a standby LC for Armswissbank. I just want to mention that we are constantly working on persuading our clients to use trade finance products while implementing their international transactions. And especially the development of international factoring has always been one of our key priorities. I mean, through cooperation with FCI. So we needed a solution to enable our clients which are involved in international trade to have the same scheme of factoring to use it in the international cross-border operations. And I think that we succeeded in it, and we found the best solution for them in our collaboration with the EBRD and our Georgian partner. As for our client, they needed to improve their working capital, and they applied to us for a loan to make their prepayment for purchasing cocoa mass from Georgia, from the Georgian partner. And we were sure at the first sight that the best solution for this case should be import factoring, as their supplies were going to be on a regular basis. So after intensive period of describing the product thoroughly and highlighting the benefits they could gain from import factoring, our client decided to trust us and go ahead. And finally, we have signed the contract. I can say that the main driver, the main motivation for our clients for using the import factoring was the opportunity of expanding their purchase power without utilizing the existing credit lines, which otherwise would be impossible. For example, if they use the import loan, standard import loan. So I think that it was a great solution, and all of us could benefit of it.
And Rudolf, over to you. I mean, EBRD has, for some years now, been supporting banks across Central and Eastern Europe and beyond in terms of helping them to develop receivables finance solutions. Do you think this will help to accelerate that process? And do you think this solution will be used more widely among partner banks?
Yes, thank you very much for this question, and I would like to use this opportunity to congratulate Tamara and Angela on their efforts to make this transaction happen. And I think it's a historic transaction. We have been developing this idea and this structure in the last 15 years, but it took a long time for our partner banks to prepare for internal procedures, to find also clients, to convince clients that factoring is an important way of financing transactions, and particularly for fast-moving goods, for goods where there are regular deliveries between an exporter and an importer. And in the past, such transactions, as Tamara and Angela pointed out, they were financed by advance payment or by documentary credits. But factoring and cross-border factoring, international factoring, is the perfect solution for repeat transactions between the same buyers and sellers. And it shows that importers and exporters, when they see a possibility to replace documentary credits by open account, they still need banks to support them. They still need an import factor and an export factor, because somebody has to take the risk. And whenever our partner banks need our trade facilitation program to cover any risk which the import factor or export factor cannot take themselves, we are happy to step in and to cover the transaction by our guarantees. This is the beauty of our program. We are standing behind our partner banks, and both TBC Bank and Armswissbank have been long-standing partners under our trade facilitation program, at first in the development of a documentary credit business, but more recently also in the development of receivables finance and factoring business. So it's a real success story of our partner banks, but also of our program to see that some structures which we developed long time ago, they work also in practice. And I think this transaction, it will be a showcase which can be replicated also between our partner banks in other countries, and it will help and speed up and accelerate the development of international factoring in all EBRD's countries of operation.
And Peter, just a final word from you. Do you presumably see this as another string to the FCI bow, and something which is now an additional benefit to members?
Well, absolutely. I mean, you ask yourself, where is the trade finance gap? And typically the gap is in the emerging market. So, to have this kind of extra tool to support the growth of trade and open account trade in particular, and financing against that trade, that probably would not have been done or structured otherwise, is a huge benefit to all the parties, of course, especially to the importer and exporter, but to the financiers, in this case TBC and Armswissbank, all because EBRD is willing to step in and basically extend their TFP program to include international factoring, which, it's a boon for us, and it's going to be very helpful. And I always say the whole two-factor system in general, I mean, today the volumes are around 700 billion, and in a normal non-COVID period, we're about 10% of that. The volume generated through the international factoring platform, EDFactoring. But what is that 10%? These are the deals that are very highly structured. These are the ones that are that require more, let's say, coverage, more protection, verification, and now with this additional guarantee from EBRD through their TFP program, it sets that additional layer. And to be honest, this is the most important. This is the SME business. This is what allows to move the needle in this trade finance gap, because you're really supporting SMEs, you're supporting companies in developing countries, and all because of this kind of conglomeration of structure. And it is to Rudolph's point, it's really unique, and it's something that's, I think, can be replicated, and we're delighted to be participating with all the parties and showcasing the world on this deal. Thank you.
Yeah, well done. Well, as you said, Peter, the trade finance gap has been there for many, many years, and it's been an issue for many, many years. And this sounds like it's going to help to reduce that gap. So congratulations to you all. We look forward to watching the momentum and development further, or use further, of this new solution more widely, and it's very exciting. Well done, and thank you very much for your time today. Thank you.
Thank you.
Thank you. Thank you.